What's up, everybody? Can y'all hear me? Having a little setting up new equipment here. My sound's all wonky. Hold on. This might be better. All right, now can you hear the crazy... Can you hear the intro song? I can hear it now. Let's go. You just went through a deja vu. I know, glitch in the matrix. I can hear things now there, I bet, huh? Boom. Let's go. You should be able to hear things now. Can't hear nothing. What? Hold on. How about no? Oh, okay. Ugh. That's better. What up, everybody? What up? Good morning. A little bit extra volume, you say? All right. What's up? Good morning. Good morning. All right, getting ready to get started here. Let me get all my stuff situated here. Let's see what we got going on here. House price index came out. Quarter world goods orders. New home sales coming out in 35 minutes. Richmond manufacturing index. All right, it's gonna be a medium-ish news day. Home sales and consumer confidence going to move the market for sure. Keep an eye on this. VIX still in perpetual decay. Market's still got no volatility. High volatility is a enemy of a bull market. Market's got no volatility because market's liquid. Liquid AF. That's how we say in the industry. Traders can show that there's just as many people longing as there are shorting this market. It means a buyer has a seller. Markets don't go anywhere, even though there's a lot of pressure winding up. The spring is winding up pretty good. All right, let's get ready to go. First and foremost, take a look at our yesterday. We know our yellow lines. Talk about this really quick. Nasdaq bounced around between it. S&P trading off of it. Still in the DD bands. They're opening up pre-market check 5-minute thing. We teach you how to do this. Rational. Looking pretty okay. I don't know where else we're at here. We have our Russell resilience indicator should be done by today. So we're gonna have a Russell resilience for you to add to the Rock Scooter platform. Long time coming, but that should happen. VIX in decay. There's really nothing going on. We're above this triple B, which means pivots are gonna overshoot. Talk about that all the time. Market still has a little bit of contango built in, a little bit of higher price from the contango that's built in, and we want to see VIX decay to maintain any kind of bull market. As you see, the last month we just continuously traded down. As soon as you break through triple B, the market just maintains bullishness for the month. Triple B is this 15.25, so we're down here. Be nice and steady for that. All right, let's get ready to get open. Get ready for the market to open. What's everybody doing today? Y'all ready to get going? Market does look pretty clean and pretty stable off of yesterday's selling. We do have a couple of moving events today. This is going to be something that's very important in the next 30 minutes. You have the CB Consumer Confidence Number that tends to move the markets. The expectations coming in forecast about 104. So hopefully that comes in pretty good. The new home sales. Those are going to be big movers today, and they're going to create some volatility. And also, just like yesterday, we saw the market start moving exactly 11:30. And that was, related to European markets closing. So in the open, we look at the pre-market, we look at our DD bands, which is something that shows if the futures have moved too far. We're clean across the board on all three index products. VIX is still in somewhat of a decay pattern, which is good for the bull market. Market's liquid enough to stay going. Obviously there's enough buyers as there are people shorting the market. So every buyer and seller has kind of found, equilibrium here, but there's really no movement yet. On this VIX. We want to see the VIX in decay. There's a key level in VIX futures. We're trying to fall below 15.25 to see that going. And so whenever markets do open, we use the Rocket Scooter platform to get an eyeball of what the positional risk landscape is for market makers. This is kind of our bread and butter here. We're the We are also on YouTube. If you go to our tweets, you can actually follow along and see on the screen what it is we're showing or what we're speaking about. I can actually show you. And if you have any tickers you want to look at, feel free to type in the chat below which ticker is important to you, and we can run a monthly map or a liquidity map on it and kind of show you what it is we do. So let us know. What up? What up? What up? Let's go. Oh, oops, I didn't mean to do that. I can't hear anybody. Is anyone speaking? Okay, hold on. All right, let's go. We are mean reversion, mean reversion. My space froze up. Oops, crap. Let's go. What's up? Yeah, pretty much sideways day on SPY. We have BSU liquidity maps. Everybody get your liquidity map front and center. We're not going to get any movement until those news events come out in 30 minutes. BSU is generally bullish if you stay in the bull zone. If you lose the bull zone, no longer bullish, so be very careful today. So this is a down day today, likely. IWM also pulling back, hedge break to the downside. So this is a down day probably. We have S&P resilience still positive, so we will likely have some support down here, but not really looking so hot. We got all kind of competing signals, which again, just tell me I just kind of want to try to avoid this market. Trade off of pivots that matter. If I want a short, it would be from here. If I want a long, it'll be from somewhere in here to trade inside of this range right here. If you open in the middle, you tend to close in the middle. So if resilience stays positive, we tend to bounce off of there. So honestly, this is it. The market's trapped inside of here again today. Everybody see that? So I would say I'll wait for the event to come out in 30 minutes and then make a move off of here or there. DD being positive, we know that a mean reversion, if you go to our... Now, everybody here, let me show you how this works. If you go to our Discord... if you go to Discord in our cheat sheets, we'll have this right here. You'll see that when DD ratio is bullish, right here. Open. Oh, they're asking me on the spaces. To go to our Twitter feed and click on this link. I'm actually showing it right now. We have these cool infographics that allow you to easily read the market, and I'm kind of about to describe this. MR is a liquidity pocket or mean reversion. The word M should say middle. It shows that the market's neither bullish nor bearish. You're trapped under a bull zone and above a bear zone simultaneously. It means a liquid market. And it's something I've said this morning about the volatility being in decay as well. Volatility is the inverse of liquidity. So when VIX is very low, markets are liquid. So basically, it's not moving. Illiquid markets are markets that move up or down when there's a one-sided push of buying and selling. So today you're kind of trapped in between two zones, which, that's kind of what we had yesterday as well. The market, it tends to be flat and choppy when you have competing signals. That's all that it means. I do like to take longs if we break to the bull side when that DD ratio, which is one of the most important numbers in Rocket Scooter, shows bullish sentiment. So today that's about a 78%. That number's been strong and bullish since last October. As you know, we were the group that called the bottom 2 days after bottom. That number is a telltale sign of the patience of everyone having in the bull market. So it is a ratio of the amount of bull stocks divided by the amount of bull plus bear stocks. So the scale's tilted way bullish still, and we're sitting in the middle of a bull and bear zone. So it tells me the market's not going to crash today, not going to sell off. It's going to try to drift up, but probably snap back to the middle. And that's how I usually look to trade it. When you get competing signals that aren't really strong or not really liquid, all you have to do is see if there's appropriate risk and reward for the trade. And in reality, both Russell and SPY, they're just kind of stuck inside of a small range. So I think today is going to be a lot like yesterday, unless we do get an event pressing some catalytic activity here at these new home sales. Market's probably not going to really do too much, I would say, just naturally. And Rock Scooter lets me see that. So within like 2 or 3 minutes of the day, I'm not in here jumping in trying to day trade every single thing that moves. There's a little sharp green candle right now. Not necessarily gonna move on it at all. So when I see 2 or 3 days in a row like we've had, I basically haven't really done too much in the market. I'm not chasing my tail or anything. And pretty much across the board, everything is looking pretty static as well. A couple of the big moving stocks from last week, same setup. Just not really moving. Tesla's opening below that 245. We were talking about that. Those big market movers are just kind of hitting some resistances today. And with no power to push them higher, I really don't think we're going to get a breakout today at all. Anyone else here think that that's what we're going to see today? Kind of flat, choppy market? If we break hedge pressure, I always like to take longs on hedge pressure breaks. Yeah. Yeah, So looking at it all together, right? So we're outside of the box. Open is support. This is from resilience, right? So type 2 resilience means that the open in price is a gap. We gap up. It's a gap and go with the open as support. Hedge pressure being resistance. This could be resistance pulling back. So you have kind of like a sandwich trade between two here. Any break into a bull long up is really decent to upper DD band, which is going to be right up here. Right. Nasdaq's definitely hitting a resistance there. As well. So the way that I look at it and going into an event that could cause volatility, I just don't want to push it too hard. You know what I'm saying? But let me tell you, this market is as bullish as it can ever get. I think we're going to likely resist here and pull back. Gonna wait for this and talk about the monthly map in a second. So the way the monthly map works, right, we're still showing increasing bullishness all the way through October and decreasing bearishness with some illiquidity pockets going into this August Fed week. So in general, that bear side is getting very weak over the course of the next month and a half. So it's going to get pretty good and bullish. If we get any pullbacks, are going to rally. So I'm here. Give me a second, you guys. Yeah. Well, I hope they can turn spaces into a thing that works on your computer where you can actually just talk in a microphone. I have to have my phone sitting here drain the battery all day long. That'd be great. So I got the monthly map open on Rocket Scooter. So one of our most important features on the platform is that we can take any stock, any ETF, anything out there at all, and run one of our calculations called a monthly map. What we do is we take the options, right? So typically a liquidity map is an aggregate of all options risks that exist for a stock. You know, these hedge pressure that you hear and bull and bear zone. Take all the risk that's out there and show you what it is in this moment in time balanced for today. A monthly map basically takes like a compressed slinky and stretches it out. So we disaggregate all of the options into their respective strike points. Their respective expiration dates. And so we basically can map out what everything looks like months in advance, and we can basically show how long the bull market's going to last, where based on where the positional data is and where bear market pivots are. And last October when we were doing this, when I was showing this to Ashton before we teamed up, I was showing him, I was like, in December, I was like, look, we have this thing called monthly map, and it's showing a bull market till the summer. And this is the time when everybody thought, the sky was falling. And as the bull markets become manifest, right, clearly it's showing the strength of the tool. And as of like the last 2 or 3 months, it was showing about the end of July was where the bear strength was coming back in and bulls were starting to take profit. And right before monthly expiration of this month, the monthly map shifted, and I made this really large tweet, like newsflash. Our indication is showing that the bull market's lasting until October now. It pushed out an additional quarter, and it's very important to note. And the way that we see that is we can see strengthening in the money calls and the bull side, just growing and growing and growing. And the way that pivot shifted an immediate quarter leading into monthly expiration is showing that the sentiment of people that are bullish on the market are rolling in to those same positions for another quarter, and the people that are bearish are actually rolling out of their shorts next quarter. And if you look at another report that we do look at called the Commitment of Traders, it's a positional risk report that shows where futures are distributed, like versus long and short, and like dealers and asset managers are holding them. And that shows right now one of the largest shorts we've seen in a very long time. The market's more short now than it was during COVID. It's a very key sign for a market that's not coming down. And the market is as long as it was in the middle of some of the strongest bull markets we've ever had. So it really shows you the appetite of Wall Street right now is that we have a liquid market with a very wound up short. Monthly maps on a rocket scooter show that short is winding out over the next quarter as well. So what that equates to is a possible parabolic squeeze to the upside with no downside. We're gonna have a week or two of probably settling out, but I think that like those of us that I've been bullish since October. I've been killing it myself. People that are jumping in now that are ready to be bullish, here's what's going to be like. Everyone's waiting for a dip to buy, right? This parabolic type move might be the rationale for there not even being a dip. If the short starts squeezing as of next week or the week after, the market's just going to go straight. It's going to go straight up. And I know it sounds a little kind of foreshadowing of a larger possible breakout. I think the S&P can break highs off of this, and I didn't think that last year. I used to think we'd probably double top. Whenever I thought we were crashing, I thought we were going to double top and then turn around. Right now, I think we're going to try to double top, and the market's going to break the highs. And now my thesis is SPY goes to 500 before it goes to 400. And I actually don't even think that SPY goes to 350 pretty much ever again in my lifetime. I'm that bullish. And monthly maps showing that the bullish side is continuing to push farther supports that. All that needs to happen is that these shorts across the board get squeezed. And so every dip that we have, if you see the market pop on a dip, it just shows that there's people waiting to get out. And the sign that you're going to want to look for to show that the shorts are, or that the market is losing steam, is that volatility is going to start picking up. As long as that VIX is in decay, every moment in time somebody short this market, they're hemorrhaging money to pay for insurance on that short, and they're going to lose their patience. I promise you that if they can't stay on the short long enough. So it's a game, and if the Fed is not being aggressive, there's really no catalyst to bring stuff down. So I'm not trying to give everybody investment advice or anything, but this could be one of the strongest bull runs we've ever seen, and it's just now starting. So a neat thing to show that, and the monthly map is still very bullish. Not today, but for the next 3 months. Cool to see that. Love it. All right, you guys, make sure you hit that like button while you're here. Check, check, check. Okay, bull market. Bull side getting stronger. Bear side getting weaker. Oh, I need to order me a Thunderbolt cable. Amazon. Okay, hold on one second. See if I'm Thunderbolt 3 or Thunderbolt 4. I guess Thunderbolt 4 cable will work on Thunderbolt 3. Anybody here an AV nerd like me? What's the longest you'd want your Thunderbolt cables to be? USB-C is very finicky about the length of the cable. If you get a cable that's too long, you can't carry a decent HDMI signal or the video signal. Is a 10-foot going to deteriorate that high def signal through that USB? Let's find out. 5K at 60 hertz. That's good enough. I'm going to braided cable as well. So I got me a new drawing tablet, so I don't have to stare at my ugly mouse handwriting. Got 12 minutes until the new home sales come out, so I'm gonna go ahead and just gonna wait until that, and then I'll have a little report. So right now I'm trying to order a cable so I can get this on Amazon on time. Braided black. Don't want gray, don't want red. I'm all about aesthetics here, baby. Okay, so the COT has two important factors. I'm going to teach you guys how to read the commitment of traders. This is the most important thing. Number one, when this red line is above zero, the asset managers, the dealers, the market never crashes when this is above zero. Okay, so now it's below zero. So safety, you have two safety nets under the market. Number one, if the dealers are positive, markets don't crash. That's one safety net. Safety net number two is that if dealer... Oh, I think alarm keeps going off. Hold on. Okay, there we go. Number two. Liquid markets also don't crash. As long as people are buying and selling to each other, liquid markets also don't crash. So when the green line and blue line are pinching towards each other or pulling apart from each other, those markets don't crash either. Number three, not necessarily a safety net, but a directional thing. Markets stay bullish as long as there's anybody buying and the dealers are shorting to those buyers. If the dealers are amassing a short, they will continue to amass a short, which is where they are now, until you exhaust the buyers. Who's buying? Everybody right now. Blue is going up and green is going up, which means the shorts are squeezing and the longs are buying. So as long as people are buying the market maintains the course. As a matter of fact, they will short so negative until both of these lines are coming down. So reversals, not necessarily crash, reversals happen when the green line and blue line are both sloping down. And if you learn those three things and read the commitment of traders, you'll be better at reading the market than 99.9% of the people you see on TV and money managers on the planet. This is the most important thing. This is the positional distribution of every important reporting entity on the planet. Those three rules will tell you so much about this market. There are not only asset managers going more long, the shorts are finally starting to squeeze. When people are buying, markets never come down. When everyone's buying, the only time markets come down is when the green line and blue line are both sloping down. The moment that they stopped pinching and both started sloping exactly right here in January of 2022, look where my mouse is, right here is when the market started coming down. This bull market is nowhere close to coming down. This is one of the strongest bull waves we've ever seen. We are more long right now than we've been in about 2 years. You see that? The dealer action is very simple. As long as people are willing to buy the stock market, you're going to have to sell to them. That's why they're going short. As long as people are selling the stock market, you're going to have to buy from them. If everybody's selling, then the dealers buy and it pushes them long. If everybody's buying, then the dealers are selling and it pushes them short. So one of the neat things to note, when dealers are actually, when everybody sold to dealers and they're finally holding more long than short, the market bottoms. That is a safety number one. So dealers never crash themselves to zero in bankruptcy when they hold the bag. But the dealers will maintain a short as long as they have to. You're short the market, they're going to buy calls and then jack up the price of the underlying, which pushes those calls in the money, which forces option sellers to accumulate and be the buyer. Right? And the minute that they need the market to drop will be that when both longs and shorts, I'm watching the market right now, both longs and shorts start dumping their bag out. So when you start to see everybody selling and shorting again, that's when markets pivot and become bearish. So it really means that everybody has to be putting downward pressure on the markets. It's pretty much how it goes. The commitment of traders, I use bar charts, but there's a bunch of, CME Group has one on their site. It's a very cool thing. I have taught pretty much everyone on Twitter that you see posted commitment of traders has come to one of my commitment of traders seminars that I teach. A lot of your favorite podcasters and influencers and whatever heard about it over the last year or two, and I've had so many private sessions with so many people teaching them this, and just reading it as simply as it is to read it. It is such a powerful tool, and this is one of the inspirations for Rocket Scooter as well. So keeping in mind, the dealers can short indefinitely, and they're going to short until everybody's selling. So you can see that right here as we rallied. One second. Oh, great question. So one of the coolest things that we're doing in Rocket Scooter is we're making, you know, our platform is not just showing where the positions are and the hedging is in the market, but we're also focused on risk management for traders. So the alerts are actually position sizing tools that I use to let me know how big I want to trade. So we say the green lights, normal market. Red lights, irrational market. And what irrational means is there's margin calls and high probability of the market being random. And so indicators will fail and things like that. So in red light, I usually sit out or don't trade big at all. I'll trade like 10 or 20% of my normal size. Yellow light means I'll trade about half my normal size, and green is a go, so I'll trade my normal size. And so what is normal? Like each trader has their own definition of normal. You know, to me, I always tell people, they say like, how much should I trade with? And I say, well, I can't tell you the exact amount because I'm number one, not your financial advisor, but let me tell you a good rule of thumb is that if you see how much money that you're willing to lose in a single day, and you don't feel like you got kicked in the stomach and you're throwing up in your mouth because you can't handle that pressure, and you lose that same 5 days in a row, and you still don't feel like you got kicked in the stomach, then that's the maximum that you consider normal. As much as you're willing to lose 5 days in a row without feeling sick to your stomach. And so that may be 0.5% a week, 1% a week, maybe for some people 10% a day. Whatever you consider normal is your normal. And so green lights mean trade your normal. You can go, markets are gonna be cleaner and easier to handle. Yellow is 50% of that normal, and red is 10 to 20% of that normal, or sit out if you just really don't want to take any risk. So if my normal was trading 10 S&P contracts, right, which is, you know, on the magnitude of $10,000 to $15,000 up or down a day, typical range of the S&P, then I would be up and down 1,000 to 2,000 a day in a red environment. So right now with a red alert coming up, it's telling me just to trade small. And as you see, the market's been choppy up and down. Trading small gives me two liberties. Number one is I'm not taking a lot of risk when the market's choppy. Number two, it gives me maneuverability as a trader to have more of my capital on the sidelines to lower my cost basis to get in on a better position as it bounces around. So Rocket Scooter's, the AI portion, is smart enough to know to inform me as a trader, remind me, hey Matt, your rules, these are your rules to trade small. And already we've got one yellow light on SPY and one red light on IWM. When any of the lights go yellow or red, I'm already trading a smaller position. And as traders, growing up through the ranks myself, always wanted a rule-based system for not only where to get in, get out, place stops, but also how big I want to trade, right? And those alerts are amazing for that. So we have 5 irrational rules that trigger me to want to trade small. If the market's random and choppy, then I'm not going to go full port on a single position and just jump in. I'm going to actually maneuver, right? And so when any of the indices break through hedge pressures, you can get what's called a gamma squeeze, which means the market can have a little runaway snowball. And as you see, IWM is breaking to the downside and SPY is breaking to the upside. Anytime they point different directions, it just shows rotation between different sectors. When they all point in the same direction, that's probably a clear sign that the market's creating a snowball. When you see them like now, SPY's up and IWM's down, then there's a little bit of just extra pressure rolling out of Russell and back into SPY. And so the way that I see that is that it's just going to be choppy and going nowhere, right? You have two really strong forces pulling in different directions. But as long as people are rolling money from one place to the next, markets tend to not crash or collapse. So as you see, Rocket Scooter, all of that I just said is built into those alerts. And as you see, the market's just chopping up and down and going nowhere. And that's what we decided to create these kind of tools for traders, is to give people that extra edge in monitoring and understanding, you know, how they perceive the market and how they want to take risk. Yeah, cotton. Anytime they point different directions, it's just rolling from one side to the next. It means, okay, so we got 1 minute until those new home sales come out. So watch out for today. All right, this came out. New home sales just came out. Sorry to interrupt you, Gav. So these are consumer confidence came in at 109.7 out of 104. That is a very massive beat on that. And then the new home sales came in at 763 on a 675. These are massively huge on the bull side. These are interesting metrics. Like I said, this is I made a video about 1 to 2 weeks ago that said we might have just barely escaped the recession. Here's 5 reasons the recession might be over. And good economic data could be that. Now, I don't know if this is going to create a rally today, but good economic data, GDP possibly going up, unemployment possibly coming down. These are all signs the recession might actually be over, and which is very interesting to see that we just squeezed out of it, or just barely squeaked by. So I like to see good economic data. I don't like to become uber bullish on these reads. Clearly this week is probably like just kind of a settling out week in the market, but good economic data is good for the long haul. That's good for my bigger thesis. And that also shows likely why the markets are positioning very bullish till October, because nothing's coming in looking bad anymore for the longer haul. Loving it. Good data. That's how you know. Yeah, that's how you know when those monthly hedge pressure is what we call the bull structure and bear structure. So basically, larger institutions that hold positions for quarters at a time, right? You have them in your portfolio, your 401ks, and you know IRAs and things like that, mutual funds, ETFs. They'll hold stocks for quarters at a time, or longer, and you know they hold big positions in companies. And so, you know, every quarter those stocks pay out dividends, and so they're the ones typically piling in their insurance into monthly options. So monthly hedge pressure just looks at the monthly options and the risk distribution around just those. And it really is the answer to where the big money is positioned for positions they hold for months at a time. And, you know, weekly hedge pressure, the blue one, is basically how much they shift up and down a little bit, like add 100,000, take away 100,000 to their millions of shares. So when monthly hedge pressure is way far below price, especially now, and then what we call the middle of a trading month, it's just so bullish. The market's so trapped in bull territory. The market is floating just on call sellers for those large monthly positions, forced to long the market at these highs because those calls have been the money, and that's positive gamma. when you're so far above monthly hedge pressure, you're just so safely tucked away in the bull territory. There's really just no evidence of reversal imminent at any point in time. And as you get closer to the end of the trading month, which is the third Friday of the month, so we got about 3.5 weeks for that, you're going to see monthly hedge pressure scoot closer to price and interact with it. And as you approach towards the end of the month, you might see it actionable. But being so far above it, it's just there's that mechanic of just that delta squeeze, or that delta hedging, just forcing sellers to buy the market on top of the actual bull sentiment of the traders. So it just shows that the market's stable. There's buyers at the high, and that's the reason why there's no volatility. What's up, trader?
Yeah, I just want to say I'm getting us Tesla at 250 for 7, so not this Friday, but the Friday after.
That's great, dude. Huge beats there. Consumer confidence looking good. So that's great for the longer haul. I don't see those data points as anything other than stimulating some volatility today. I don't look at those as moving catalysts for today. Those are sentiment, longer term type sentiment. And as long as the bull market's looking good for the long haul, the bull market's looking good for the long haul. No complaints there. Huge beat. Thank you, Luke. Lucky Luke. Appreciate you. All right, guys, smash that like button really quick. And also, if you want to check out Rocket Scooter, do this for me really fast, right? We're about to have futures launch, and I can't be excited for this. We're gonna have futures data. We're gonna connect to over 80 futures brokers, and we're also having a partner brokerage work with Rocket Scooter. So going forward after that launch, you will have brokerage services through Rocket Scooter. So if you trade futures and you want to go with the next generation, come along with us for the ride. We'll get you situated of everything you need. Futures data is going to come through, which will automate your DD bands, risk intervals, yellow lines, red lines, all of that. You have the ability to click a button here, connect to the broker, phone them up for brokerage services, get yourself an account, whatever you want to do, and also execute your trades through Rocket Scooter for futures. Coming in about a month after that, we'll be able to connect to almost every major U.S. stock broker and options broker on the planet as well. We will be the most interconnected trading platform on planet Earth by the end of August. We'll be able to connect to every single broker for the most part that has a ability to connect to, which is just about all of them. So you'll be able to tie into your TD account. You'll be able to tie into your E-Trade account. You'll be able to tie into your Trade-Evade account. You'll be able to tie into your Ninja Trader. You'll be able to tie into all these different places and execute your orders from Rocket Scooter. So if you guys want to be in when that launches, sign up for our Pro Plus, and let me show you something very cool. Will this work for Canadians? No, our platform hates Canadians. It's gonna work. Of course it'll work for Canadians. I'm just kidding. I love Canadians. My favorite people on the planet. I don't know if your brokerage account is one of the brokers listed here. I don't see why it wouldn't work for you if you're Canadian. Unless your country doesn't let you trade U.S. accounts. I was making a joke out of the way you asked your question. Like, will it work for Canadians? No, we hate Canadians. They're the worst. I honestly, it has to do with, if you mean Canadian brokerage accounts, if that's what you mean, I would have to check what's on the list. And I'll have to see. Futures is a global thing. So futures doesn't have any much limitations like US equities would. So I'll have to see. You should be okay, I think. Because the future, half of the futures brokers on that list are global. The name isn't even written in English. It's written in Japanese or Chinese. So we've got global exchanges. So I'm sure there's no lack of options for you to trade anything. Now, when it comes to the equities world, that's a little bit different story. Since equities in the US is a US thing, they may or may not allow you in Canada to trade US exchanges. I don't know the legality in your country. You have to consult your advisors there. But like for an example, like in the US, there's certain products they don't allow us to trade. Like the SEC won't let us trade CFDs from, something that everyone in the world trades for the most part. So if Canada doesn't let you trade certain things, that's between you and your legal system. on what accounts you're allowed to have. But if you have a brokerage account with the broker, there's no way we're going to be a hurdle to you connecting to that broker. If you can log into that broker with your traditional broker platform, you'll be able to log into it with Rocket Scooter. Yeah. I'm a Cajun, right? So Cajuns are former Canadians. That's where the word Cajun comes from. French Cajun. So my Cajun ancestors came the Canada route from France. That's why they say Southern people are so nice. I have to say, it's that French mentality. It's why Canadian people are so nice and Southern people are so nice. Gotta give it to the French. That's our we bring the cool to the world. Okay. Anyways, back to what I'm saying about futures. So you'll be able to connect to your futures brokers. Click that extended trial right there. Let me tell you something really cool. The extended trial is going to be $35 a month for the $199 package. So you get to try out the platform for 3 months just to test it out. That's for Pro only, and Pro will not have connection to futures. But if you want connection to futures, upgrade to Pro Plus. I promise you this, during your extended trial, you will see a pop-up deal at some point up here on your screen. And it'll talk about how to upgrade to Pro Plus for a very inexpensive rate. The $199 is the market price. And after we launch the futures, the deals are going to change drastically. So if you're in before that launches, you will get that Pro Plus for under $100 a month. And it's normally going to be $2. And as the years go by, it's going to raise prices. We add crypto and options and other things to the platform. But whatever you lock in at under $100 or whatever, you actually lock that in for life. So you never have a price raise. And we're doing that for our first batch of people, our first 5,000 users. And then we're going to get rid of the lock it in for life thing too. How many users do we currently have? About 4,300. So we're getting close to the 5,000 cutoff. Just letting you guys know. It's crazy to see we have 4,300 user accounts. It just blows my mind. I didn't think that was ever going to... And we just been open a year. So here's the thing. Per month, the extended trial lets you try out the platform for just $35. All it does is pay for your data, and you get everything else for free. We have the education. You can go in the Discord and get all the infographics. You can learn all the trading setups, the alerts, everything. The full boot camp, you get 3 months to try it out for $35. You can lock in the rate. How much will be under a month? I'll just tell you, it comes in at under 100. For the full service, the full platform, all your data feeds, price never goes up. You'll have every data feed that's possible, the option to connect to all your brokers and trade within Rocket Scooter. Less than $100 a month. If you go through the trial first, and you click that pop-up when it pops up. You have to have Pro Plus for the trading features and the futures features. Pro will not have integrated DD bands. Pro will not have red lines, yellow lines, catalysts. Pro won't have all the alerts. Pro will just be equities only. Oh yeah, look at this. Resilience is in less than 0. So good. Everybody, are you glad that you watched today from the sidelines if you didn't trade? Are you glad nobody chased a long if you did want a long? Nobody chased a short if you did want to do anything through here? Anybody sit out? Tell me what you did. Clearly short setups were more favorable. I didn't say I was going to long today. Said mixed signal, probably hit hedge pressure, open the middle, close in the middle. Easy peasy. If you build it, they will come. I know, see? We have a very big, like I said, I couldn't be more excited about how big we're growing. We will be 10,000 people by the end of this year. That to me is the most exciting thing to note. I thought it'd take us 3 years to get to 10,000. It'd take us 1 year. 10 a.m. CDT. Okay, I got a meeting at 10. Dude, I'll tell you something. Can't incredible how monthly map is so sick, bro. I'm gonna tell you, monthly map to me is one of my most proudest achievements. I always wanted. Now again, it wasn't like I do a lot that you guys don't see. I spend the majority of my spare time, well, Matt knows, while not playing Halo. I spend the majority of my spare time theory crafting. I'm making spreadsheets. I'm making tools. I'm going to turn this off really quick. I spend the majority of my time outside of Rocket Scooter building relationships, building tools, looking at data, chewing on data, talking to people about data, doing little experiments, little data mining operations, all kind of stuff to really come up with these tools. It's my favorite things I do to build things. Monthly maps are my favorite, proudest achievements. Resilience is probably my proudest achievement. Monthly map probably close second. It to me is by far not to flex. It's probably the most important tool that anyone could have in a trading platform. Plot out the next 3 months of the market. Look into the future. It's not using support, resistances, price, action, nothing. It's looking at where positions are distributed over the course of the next 3 months. How valuable is that as a trader? You're aiming swing trades, you're aiming position trades. How long out do I buy my calls, my puts? That to me was something that was always missing from a trading platform. When I started trading options, one of my first thoughts were like, well, which strike do I buy? Okay, well, which expiration do I buy? There's no guidance for that. Monthly map was designed to approach the guidance of how long you want to have those calls for and how long you have those puts for. When does the market pivot to be in your favor? So I know that when I stop, when I stop losing by being out of the money. Right? I have more users on the platform, more user accounts on the platform than a shorter amount of time that you have obtained 10K followers. So yeah, pretty much. It's really helpful when everybody's using Rocket Scooter that I work with, like in podcasts, like everybody that Ash and I have met, or like, let's check out Rocket Scooter, and they're immediately hooked. Like everyone likes their favorite tool, which is cool. And then there's just a bunch of people out there just using it, and then their community started using it, and like we have, God, like maybe 10 or 15 trading communities alone that use Rocket Scooter, and they're just doing it because they do it. They don't even like we pay them or anything. Like somebody just they love hedge pressure. They use it every day. Somebody loves the scanner. They use it every day. Somebody uses monthly maps in their investment community. Everyone is like hungry for something new in this new environment. You know, post-COVID trading, bear recession. People like the idea that we're risk management focused, that we plan out the future. We're not just picking momentum or trading off of indicators. It's a very modern approach, and it's very attractive to like the newer generation of traders. Because the newer generation of traders, I'm not going to make fun of my own, being a millennial myself, and the Gen Xers and the boomers, we're the old schoolers, we're the old folks in the room. These new, I'm not going to lie, these new Gen Zers, they've got a bigger appetite for truth than we do. They're very hungry for shit that makes sense. They're not easily sold on indicators and things like that. They see that they don't work, immediately ready to reject it and move to something better. You know, like we were like, okay, let's try out these indicators and see if they work. And then you'll stick with them for 5 or 10 years. I'm finding out people are like, man, I've been trading and I find out this technical analysis that I've been using doesn't work for me. And I'm ready to find something new. And I'm like, oh, well, how many years have you been trading? No, I traded like 3 weeks. I started about 3 weeks ago, and I already don't like it. I'm ready for a change. And I'm like, this is just my ear to the ground, understanding my market, my public. The newer kids, the kids out there, amazing appetite for knowledge. It's incredible. And I know if you're Gen Zers in here, y'all get a lot of heat from the old folks like us that are like, you guys are lazy and don't work. Well, y'all are just more independent, I would say. More self-driven, more self-motivated. It's not that you don't want to work. You don't want to work for someone else. You want to work for yourself. And I think that's a very beautiful thought, because that's me too. People probably thought I wasn't that motivated of an engineer relative to everyone else, because I didn't want to exceed in that world. I wanted to be good at anything I touched, but I wanted to be good at something I built. And that to me is very awesome. So our audience are people that like have lost their patience with the traditional stuff like weeks into the game, months into the game. And to me, that's very cool. That they read the books from the 80s and the 60s and they like, this looks like a bunch of junk. And they're not going to let some old folks like us tell them, no, give it a shot. It might work for you. They're like, no, this don't work. Information age, baby. They don't have mortgages yet. 20%. What are you talking about? Does Rock still have a tool that highlights large changes in the day-to-day options positioning? I know it's implicit in the liquidity map. So the day-to-day options positioning is reported the next day in the liquidity map. There is, I'm not going to tell you, Cotton, this is how this works. We have something called dynamic hedge pressure, which tries to estimate where walls and hedge pressure move to based on changes. Here's the thing. Nobody knows the changes in the open interest. Nobody does. That information is not even available to the exchange. That's why options positions done in dark pools, for instance, are reported. At the end of the day, everybody's forced to report to Opera. Not even Opera, the options authority, knows the real-time open interest. Do we all understand that so far? Nobody knows the real-time open interest. It's impossible to know. If you did, you could write an algorithm that would never be wrong, because you know everybody's positioning in real time. We know everybody's positioning once a day. The best you can do. So, but what we noticed observably is that hedge pressure stays actionable until 2 p.m. Eastern every day, no matter what. Which means the changes day to day are nowhere near the total risk piled up in positions. An example, some company owns 5 million shares of Tesla as part of their portfolio. They're not out there trading 5 million shares a day. They might be trading 100,000 up or down a day. That's it. So the amount of movement throughout the day is nowhere near the amount of risk that's built up sitting there. So it'd be a fruitless thing anyways to try to say hedge pressure changing up or down by a significant amount, because it wouldn't. It would only change up or down maybe a strike, give or take, which is why I always use the one strike rule as my stop loss. That's the variability. It's a bold strategy, Cotton. Let's see if it pays off for him. Dodgeball, baby. Love it. All right. So now we did write a model that tries to track real-time open interest, but it has to make a lot of assumptions. Every trade that's made, our model analyzes, and it tries to guess where hedge pressure moves to. Those dynamic overnight positions that we post in the bot for overnight trading, Cotton, those are based on that model. It's an estimate. The best you can do is estimate what every trade is, add or subtract to the open interest. You don't know. We have a very sophisticated model that does that, and that's how we're able to give you estimated hedge pressures overnight, which is trying to estimate what 930 would be like based on the model. And because there's a variability, that's why the estimate comes to you as a range. If there's 10,000 contracts open for this particular strike for this particular option, and throughout the day the volume is 2,000, then at maximum the OI would be 12,000. At minimum the OI would be 8,000. So our model tries to guess where inside of that range the open interest actually is based on how the orders were maintained or how the orders are placed. Was the bid and ask when the order was made, things like that. And so we take a high and low approach as opposed to try to be as sophisticated on exactly what the answer is. So we have an actual dynamic hedge pressure we calculate, which is the moving hedge pressure, but then we just present to you the range, the highest and lowest it could possibly be. The overnight indicator is an attempt at extrapolating. So throughout the day, I can show it to you right now. It's actually here. Here's how it works. Watch this. So in my prototype, watch this. Watch this. So this is the prototype. And for SPY, for expiration tomorrow, look at this. This is real-time hedge pressure as it moves. Watch this. Hold on. 433. And this is what the model estimates hedge pressure can move to. There's a high and low estimate. It says it's somewhere between 433 and 434. That's accurate, by the way, which is why those numbers overnight are very actionable. And the estimate is trying to estimate based on real-time open interest. And that real-time open interest model, like I said, is $1 billion idea. If you can get that thing as accurate as you can, everybody in Wall Street, it's one of the holy grails of trading. To know the real-time open interest of the options market is to have an algorithm that does not ever lose a trade. You will understand how everyone's exactly positioned and exactly the depth of the entire stock market. It'd be crazy to have that. Hold on. Let me do this thing really quick with the spaces. Easy peasy. So hedge pressure break to the upside. Keep in mind, healthy rotating, hedge pressure break up, hedge pressure break down. That's just sector rotating. When these things point different directions, markets usually don't crash. Right? That just shows rotation. Well, actually, you can use our tools as a correction to indicators. There's a bunch of inferences you can make about good signals, bad signals, right? DD being bullish, number one, means that the market is not going to break to the bear zone in a mean reversion. This is something that we show you in our indication set, right? So if you end up getting like bad momentum or downward momentum signal, like your momentum's like, okay, time to short, you know, crossovers or VWAP or whatever, and you can say, well, actually, if DD is greater than 0.6 when irrational, or greater than 0.5 when rational, so it's this is bullish. If you're in the MR, it tends to want to tap the bull zone rather than the bear zone. The tiebreaker of the middle, DD breaks the tie. The tiebreaker of the middle, DD breaks the tie. So that's pretty cool, right, Cotton? So you can use Rocket Scooter as a corrective measure to turn on and off technical indicators and remove some bad signals. If the arbitrage is pointing in a different direction and your momentum is like, well, it's probably down, let me chase the short. You had competing signals. Resilience was negative. DD was positive. One's pointing down, one's pointing up. The idea that you're just jolting between the two is exactly why you have those competing signals. You see how that works? So I already said at the start of the day, it's going to be choppy. It's probably not going to break out. It's probably not going to crash. You go to the first 2 minutes of the stream. We're probably trapped right inside of here, and I literally circled this. Everyone else that you listen to trading on these spaces, apart from the people who use Rocket Scooter, they're all just chasing the trend. Everybody here is like, should I go long? Should I go short? And I'm like, I'm probably sit out today. Look at that. Look at that. It's time for people to wake up. These infographics are boss. I love these things. So go get them from the Discord. You see how this works? This is literally right on point. Right on point. Y'all see that? Okay. They're in the cheat sheets. They're also in the boot camp mixed up. But essentially, make sure you sign up for the extended trial. We'd love for everybody to check it out. And that way you can get locked in for when Pro Plus comes out. I mean, when futures come out, you can get locked into Pro Plus. And you can have futures data and futures trading. It's under $100 a month. And the deal is fantastic. Y'all are never going to get a better deal than that. So appreciate you supporting the group. We love you. I'm going to get out of here. I got a meeting in a little bit. Very important meeting. God, stuff where I just like... Imagine like a little kid that's got a secret that he can't tell. I've got so many things that we're building that I'm so excited about that I can't even talk about yet. Not even related to futures and trading. I'm talking next step Rocket Scooter stuff. So I've got a very important meeting today that goes into those things. Yeah, so we're going to have a busy couple of years. That's for sure. If you have a pro account, genius, all you need to do is upgrade to Pro Plus. If you haven't used the pop-up on your platform, it'll say like, click for the deal, send me a message. Send me a message. And I will get you guys, because earlier in, we didn't have the pop-up, so you might have missed your window to sign up. I will give you a coupon code to get the Pro Plus for the deal. You have to be in the extended trial first, and then you upgrade. You saw the pop-up took you to Pro account. It should have been Pro Plus. Genius. So send me a message. I'll check for you. Should have been for Pro Plus. If you took the Pro, then you opted into that one instead of Pro Plus. But now we're letting you know Pro Plus is the only one that's going to have futures. So I'll show you how to upgrade. Yep. So send me a message. We love you guys. Thanks for tuning in. No trades today. Didn't touch it, didn't do anything. Just waiting it out. Flat market, doing exactly what I thought it's going to do, which is absolutely nothing. Rotating in from SPY and Russell. You see healthy sector rotation, no crash. DD's nice and bullish. Market's going to still float up here from the mean reversion, but hitting hedge pressure resistances is pretty normal. Stuck in bull side on Qs, resisting hedge pressure as well. Easy to see a sandwich day today. Speaking of that, I'm going to make me a sandwich for my meetings. I'm kind of hungry, but wake up, see what is, trade what is. I'm not out there picking long, picking short, and if I were to trade, I know I'm scalping between a couple little areas of interest, and then that's basically it. Easy peasy. See y'all later. We love y'all. See y'all tomorrow. Remember, rocket scooter, we're here trying to change the game. A scooter is something you pedal with your feet. It goes really slow. It's a very old school way of getting around, you know. Rockets get you into outer space. We take the existing thing out there and put a rocket on it. Built in our garage. So that you can take your Flintstone-powered child's toy and give yourself some sophistication to be able to understand the markets to a higher degree than you ever have been able to before. This is the future of market analysis, of course, because we literally look into the future. We use options to dictate our analysis method instead of past price action, the shape of price, and drawing like crazy lines all over our charts. You know, shapes and colors don't really work too well. What we do look at is positional risk into the future. Where is everyone positioned in Wall Street? To me, that's staring over the shoulders of giants and staring at their homework. They bought and sold for a reason. That's all I need to know. To me, I base all my decisions on that information rather than what they did in the past. Where are they now? And that's what's important. We'll show that to you. Join Rocket Scooter today. A very low price, $35 a month for the extended trial. Link in the description below.